Welcome to Unlock Your Wealth Today, your life fully invested. I'm your purveyor of prosperity and host, Heather Wagenhals, and I'm making success simple from Freedom Fest with this interview with marketing strategist and vice president of Creative Direct Marketing Group, Caleb Huey. Caleb, welcome to Unlock Your Wealth Today. It's great to have you on the show.
Thanks for having me.
I'm really excited about this because for those that are regular viewers, they know that I talk about when I used to be a stockbroker, back when you used to have to sign the forms in triplicate, before there was even this electronic trading, and I can do it from my phone with an app now. And so I sold stocks to a whole bunch of people. I was really young. I was in my early 20s when I traded, and there was a barrier to entry to begin investing.
Of course.
And then as I gained more experience professionally and I had a little pile of money, but I wound up going to an investment fund. Now, when I started to do this, we did pre-IPO stuff. And of course, what's the requirement? You must be an accredited investor. So what's that mean? You got to have $1 million. If you don't have $1 million, sorry, you don't get to play. And that's where the big money is made, before the stock goes public. I mean, there's money to be made after through the growth of the company, but the people that take the first risk are the ones that get the biggest reward. But it's exclusionary until now. All right, so let's talk about what changed. What is the Jobs Act, and what did it do for us?
So the Jobs Act in 2013, when it was passed, was an exemption that allowed for advertising your investment offer. And the first deregulation in that space was for accredited investors. Suddenly we were allowed to advertise to accredited investors, and they continued to deregulate until the Reg A Plus, which a few years ago, when it was passed, allowed us for the first time to advertise these kinds of exclusive pre-IPO offers to anybody that's non-accredited with a cap of $50 million. So we're now allowed to advertise that offering. We're allowed to raise $50 million prior to the company going public. So a lot of these companies are, instead of getting their cash from an investment bank or a fund, raising capital from the high net worth investors, they're going to the crowd. People that would be an advocate of the brand, people that would like to, if it's a product company, buy that product. Whoever the target market is for that company, whether it's a product or service, they can be an investor in it because they believe that it's going to take off in the marketplace.
Well, I've done some crowdfunding stuff for some little gadgets, and there's this one clothing brand that I like to shop online, and when they come up with a new design, they crowdfund it, and I guess, have people vote with their dollars to determine, is this going to be a viable article of clothing for my next, spring fashion line or whatever it might be. So what makes this type of investing different as a crowdfunding opportunity? And then, well, let's answer that first. So what makes this different than me, like just crowdfunding for like a couple $100 and then they send me the pair of pants if they make it?
So Kickstarter obviously was a pioneer in crowdfunding. The model was skirting a securities law, and so it was a donation. It wasn't investing, you didn't own equity in the company. So it's, if you give me $100, I'll give you a t-shirt with my company's name on it. That's not a good deal for the investor that gave you $100. This is equity crowdfunding and debt crowdfunding, and it's actually an investment, where if you give me $100, you own $100 of my company. It's a stock, right? So most people end up investing $1,000 or $5,000. If they have a little bit more income, disposable income, they can invest $50,000, whatever it might be, whatever their appetite is. That Kickstarter model that pioneered the space is actually what enacted and urged Congress to make rules to allow people to crowdfund for equity and debt in the first place, an actual security, an actual investment. So the big debacle with a company that crowdfunded their technology was Oculus, where people pre-ordered the Oculus virtual reality glasses. If their money that allowed Oculus to actually develop their product had been an investment, the company was bought out for over $1 billion. That money that they had put in would have been worth hundreds of thousands of dollars per
Yeah, I mean, I'm getting
investor.
goosebumps thinking
But
about
they weren't
that.
investors, they had pre-ordered the product. So that is really what put pressure on the law to allow the common people that want a company, they want that product to be in existence, to allow them to invest in it as an actual investment opportunity.
That's pretty exciting. You know, and if you think about it, I mean, that would have been a big score for those first in, you know. I mean,
It would have been one of those unicorn investments where they would have made more money than they've probably ever made in any other stock.
So how long or I guess, let me change the question. So as a business owner or an entrepreneur, have they really adopted this, or are they still doing traditional, oh, I need to do an offering and blah, blah, blah? Because I know with our public company, you know, that's what we did. And you know, you do the friends and family round, then you go to grab bigger money, and you have to deal with the accredited portion. And you have people that you have to pay big commissions to. So with crowdfunding, if I'm an entrepreneur, so here's my question. If I'm an entrepreneur, why would I want to choose an option if 50 million is all that I'm looking for or less? Why would it be better for me to choose crowdfunding versus a traditional type of private offering?
Sometimes people can't get their investment capital from an investment bank. Sometimes people have a large fan base, influencers, people that have some kind of brand or advocates or current customers. They could go to their past customers and say, hey, we're raising capital. Would you like to invest in our company?
Okay.
If those people have already bought your product, they're a natural fit to become your advocate as an investor as well. They already believe in you.
Right.
So there are different entrepreneurs in different scenarios that take advantage of the law. I would say currently, the biggest example is in the cannabis space, where the cannabis companies don't have access to institutional investment because of the federal, criminalization of cannabis. But a lot of cannabis companies are raising capital. They're really being propped up by retail investors, common investors. So these companies are probably the prime targets for this Reg A Plus and crowdfunding, where they can go out, they can raise $50 million, they can plant more seeds and bring more cannabis to fruition and then sell more product. That space is probably the best example of success currently. Recently, a company, Pharmaciello, was listed as a Canadian company, dual listed here on the OTC market. Listed at $3.35. They then quickly shot up to over $1 billion market cap at about $9 a share, so $3.35 to $9.
Wow, almost $6.
They took advantage of this private Jobs Act marketing. That's the name of the actual regulation legislation, the Jobs Act. They took advantage of the Jobs Act.
So it's in addition to Reg D?
It is so there are different filings. The Reg D 506C is under the Jobs Act. That allows you to crowdfund from accredited investors, and then the Regulation A Plus allows you to crowdfund from non-accredited investors. So they have different filings for different needs for different companies. But Pharmaciello is a great example of a company that was able to raise capital under the Jobs Act, take it public, and see some great appreciation for their investors.
That's really exciting. You and your father co-authored the 23 Equity Crowdfunding Secrets to Raising Capital. Mm-hmm. So this book is a wealth of information, and it's compact. There's no fluff. It's all like meat and potatoes right in there. So that's what I like about it, because it's just, here we go. So give me a couple of the secrets that you discuss in the book that make this work so well for you and your consulting company and what you do.
So we've been in the marketing and advertising space for my father for 45 years. I've been working with him for about 10 years. So everything that we approach is from a marketing perspective. So from my experience, I know that I can do an advertising campaign to get people excited enough to buy a product. So shifting our thinking for equity crowdfunding, how do we tell the story of the company that's raising money, and how do we identify the right investor that's going to like that story and then want to put $1,000, $2,000, $3,000 in as a shareholder? We started taking those marketing principles and applying them to raising capital, and that's what these 23 secrets are.
Wow, that's pretty exciting.
For us, it all boils down to rate of return. So if I spend $100 in advertising, how much am I getting back? Am I getting back $1,000 in investment capital, $10,000 of investment capital? We always look at that rate of return to make sure that it's appropriate for our client and that they're happy. And as long as they're happy, we continue raising capital until they're finished with their filing.
So would you say that that marketing dollar is just as effective as the retail product itself? You know, when you look at the ratios of ROI, I mean, that's what people think, okay, if I spend $1, am I going to get 10 back?
Yes.
So
for the companies that are raising capital, they usually earmark a budget for PR to help raise that capital. They spend it with us. Sometimes they've earmarked $100,000, right? If they spend $100,000 and they get $1 million of investment capital in from the investment community, they might spend another $100,000 with us and bring another $1 million in. And they spend another $100,000 and bring another $1 million in. They continue that until they're fully subscribed. For the investors, you know, they're kind of outside of that whole scenario. Obviously, it's all spelled out in the use of proceeds of the company. But as long as we're getting about that 10 to 1, the cost of capital is not egregious at that point. So that's kind of the bar that we set with our clients. Is as long as we're getting over that 10 to 1 return, it's probably worth it for them to continue the campaign and keep raising money.
this sounds like an incredible opportunity for not only the investors, but for entrepreneurs alike. Mm-hmm. If folks want to find out more about what you do, get your book, become a client, what website do they go to?
So my company is called Creative Direct Marketing Group. We have a website, cdmginc.com. And we can we do have this book available. I believe it's $20 for folks that are here at the show.
Oh, what, $20 here?
Yeah.
See, this is why you're not. This is why you have to attend Freedom Fest.
Yeah, so it's $20 here at the show, and you can order it on Amazon, or if you make it over to our website. We do have a special report if you want to read a more condensed version than the book. Or feel free to contact me directly. You can contact one of my reps at my company, and they'll pass your information over to me, and then I'd be happy to talk to anyone.
Well, thank you for being a part of the show today.
Thank you so much for having me.
It's been great having you on. And for those of you without a pencil, never fear, unlockyourwealthtoday.com is here, where you can visit Caleb's show page, get the links to all of his great resources, and so much more. For the maestro of moolah, Michael Terry, I'm Heather Wagenhals. Now go out and unlock your wealth today.
UnlockYourWealthToday.com is produced by Heather Wagenhals and the Unlock Your Wealth Foundation. UnlockYourWealthToday.com and its affiliates are copyrighted 2018 with all rights reserved. For more information on the Keys to Riches Financial Wellness Series, please visit our website at www.unlockyourwealthtoday.com.